Good morning, everyone. Welcome to this beautiful Wednesday. I'm your host, Marcus Stalker D, and we're going to be looking at some metal markets, which is the name of the show. But we're also going to have a look at the energies because that is one of my specialties as well. I am running a short on natural gas at the moment, similar level to yesterday. The name of it has changed a little bit, but it seems to be some gamma pinning around this 310 level. So I'm going to see if we can get a more serious move down. Slight danger is the regular trading hour value high. So here is the value, this purple area, sitting right around 306. If it breaks that, we have a possibility for a bigger move down. That should happen a little bit earlier than normal. Now let's have a look at some big time frames. So looking at the 4-hour time frame. So we have a little bit of a supply here that is low quality, but we are still smashing down. Let's have a look at the daily chart as well. Make this a bit bigger. Yeah, so that's looking pretty bearish still. Wow, what a couple of weeks, eh? So yeah, we'll see whether they can continue to show this bearish sentiment on energies. We have heard Trump say that he doesn't want crude oil above 100. That would be very, very bad, and that's probably the reason why crude oil has been smashing lower ever since. Briefly touched, almost touched 120, and then started to reverse. Now it's settled in a bit of a range, still insanely volatile, but I've noticed that natural gas has started to actually be correlated with crude oil. So that's unusual at best. Alright, let's get back to natural gas and focus on the metals. The weakest of the metals today is by far copper. If we use the Asia range as a guide, the Asia range was very small. Now, whenever it's a tiny range for Asia, that tends to bring more opportunities for breakouts either side. Today we broke to the downside, and since then it's found some temporary support around the gamma wall at 585. That's the end of day gamma wall. Let's have a look at the 4-hour time frame, looking very bearish. So we had a distribution here, smashing down. At some point today, I wouldn't be surprised if that continues. However, gold and silver are not exactly following that yet. It doesn't mean that they won't. But if I go to gold, you will see that gold is still very, very contained inside, again, a very tight range comparatively. Now, when I say tight range, I do mean range according to what the averages are at the moment, even though this range is still massive. If we take into account that gold currently has an average daily range of 1,400 ticks, and then we see what Asia did. Let me grab my measuring tool. So where is the end of Tokyo? There it is. So we are only working with about 327 ticks. Now usually Asia is the one that sets the tone, that sets the range for the day. So obviously anytime something starts to break out of that range, you need to maybe consider continuations. Now, silver is in a very interesting area here. I am looking at some shorts in silver because of the other Craziness. Sitting below the regular trading hours value, sitting below VWAP, and currently establishing a range around the Asia low. But still, just like gold, it hasn't actually moved too far away from it. It tried, definitely tried, but is it time to short this? One issue slightly today is that the initial balance is establishing a range. So ideally, if this runs, I don't want to be in a situation where I'm shorting the bottom and then having to take the entirety of the range. So the tape is pretty slow still, so I want to wait a little bit longer. Maybe once we get, maybe in about an hour's time, so we can have a look at where silver is and see if we can get a short out of it. There's always a danger that Asia low brings some pullback into the volatility of the overlap, and that creates quite a few problems for a lot of people. I prefer to trade silver either in between the end of Tokyo and before London. That would be my first setup, and then really after that I don't like looking at it or trading it until we get closer to either the London close or COMEX, unless we get a breakout from the Asia range. Then maybe there's an earlier setup, but generally the probabilities for silver doing something nearly every day with a high conviction and high frequency of occurrence, that's going to be later in the day. All right, so let's see what the natural gas is doing. Let's see some other levels. So we still have the 310 as a possibility, but if it for some reason starts to go higher due to headline risk, then I do have 320. This is from yesterday, 330, but 320 is the first area where I would be maybe looking for some kind of a slowdown, or maybe even using it as a potential for a squeeze into this ADR high and then seeing what they do there. But for now, it all looks pretty bearish. They are definitely trying to go into this regular trading hours value area from yesterday. This is the NYMEX value. Right, let's have a look at who's on in chat. What happened to Aaron? Nothing. Aaron's just on holiday. He will be back. Don't worry. He's not going anywhere. Well, he's gone to Finland. But yeah, Aaron is just taking a bit of a break. It's fine. We've got Keith. Capel is asking what's my name. Well, it's on the... Isn't it on the thumbnail? Pretty sure it's in thumbnail. That is my name. Metal Markets with Deeyana, right? Unless they've changed the thumbnail and I didn't see it. Yeah. All right. Yeah. So far I'm just observing. Again, if I short now on silver and they whip it back up, then I'm going to be crying because I'll be like, why did I short the bottom? Don't want to be short bottom. I need a little bit of energy today. For some reason I woke up at like 10 to 7. Okay, so tape is still not really grabbing me on silver. So what they're doing is they kind of make a move and then it just kind of stops and hangs there. I want to see more movement in the tape before I decide to run a breakout trade, because for breakouts of anything, and this would be an Asia low continuation type trade, you need the momentum, right? If it's all very slow and it's all just like dragging along, that's probably not a momentum trade. And that's where we can all get in trouble trying to run momentum trades without momentum, right? And another thing is that we have a very small neutral day. So if you look at initial balance high, initial balance low for London, you will see that it failed the auction, rotated through it, went to the other side and pinged back in the middle. That's a typical range. So until that changes, I'm just going to sit on my hands and babysit my natural gas trade. Natural gas was a failed auction trade. Let's talk it through. For that, I am going to need a couple of markers here. Okay, so initial balance high. What's that? The first hour of trading range. So wherever the high and low are created during that first hour. It'd be good if I actually pressed OK when I do things. All right. Went above it, smacked into the X3 level, reversed, failed the auction with a very, very orderly bearish engulfing. Okay. Rotated straight to it. Right now we have the potential to also have a neutral day where it pings back in the middle. That would not be ideal. Or it starts to rotate down and leaves single prints. So we would need a strong move down that closes in the next sort of 19 minutes or 17 minutes into a single print. It means a strong move down. And then I would also like those single prints to stay if this is going to be a more serious move towards this ADR low where my pretty aggressive target is. But the reason why I have it there is because this is a product that generally is pretty directional until certain parts of the day because it's a commodity. And you can see it, you can see that behavior yesterday as well. So we went down, opened up NYMEX, messed around a little bit, finally made a move. But then as soon as that final hour of NYMEX started, they reversed it and took the entire move. This is what I call the day range fill. Why? Because it fills the day's range. So it's a very innovative name for a playbook. But crude oil, natural gas, they do this a lot. So it is a good thing to know when you're trading one of these products. Kind of equivalent to MOC on equities, except MOC comes much, much later in the day. But commodities settle earlier. Still a range in silver. Look at that. Like little soldiers. Doesn't this remind you of little soldiers kind of sitting there? So until that resolves, I don't want anything to do with it. Save those as templates so you don't have to type the same stuff every day. I have to type the same stuff every day on this platform because they don't have the third-party indicators. Now, I do have my own indicators where everything is chewed up for me, ready to go. And if they ever allow third-party indicators, then I won't need to do it as much. However, I actually quite like diagnosing a chart, not just by having an indicator plop a line there, but instead having the diagnostic eye by seeing, okay, so where is the ADR low? Where did we create the initial balance high and low? Where was the Asia range located? What did the TPO do yesterday? Where's the value area from yesterday? That helps me stay out of my own head, and I highly suggest that you start doing something similar because it's all very well if you have a random line on the chart, but if you are the one who diagnosed that line, you should know what the line serves, which purpose the line serves, what you intend to do with it, so having a hypothesis. And somehow, whenever you get like done and dusted lines for you, that process never really happens, right? It never happens. All that happens is that you're like, oh, what? There's a line of what did I want to do with that? But just going through this process of, chewing up through the options chain. And I mean, as far as templates go, I do have these lines always on the chart. But me dragging initial balance low and high from 2 days ago, it's just quicker for me to grab one and to put it on the chart. So I really don't see a problem. Agreed, but I mean the text IB high and low, for example, can be a template that you can still, but then I'm gonna have so many lines, right? So I need one line for the GEX levels, or 5 or 6. Then I need another 2 lines for ADR high, ADR low. And I have them, a lot of the days I just basically do this. I go into this coordinates and then I put them on the chart. Just like type in the coordinates, it's all there. It's just that on natural gas, I don't frequently look at the initial balance low and high for London. And if I'm trading through my own charts, that's already there for me. So I don't have to do much. I still have to do the options chain, because that changes every day, sometimes even intraday. All right, so silver's still really undecided here. Just at Asia low, just to annoy everybody. It's like, we're just here. We're hanging. We're not doing anything. Can I explain why my initial balances are there? Futures balances are GC 8:20 Eastern. Because this is the London session. So, in case you haven't noticed, COMEX hasn't started yet. And then when COMEX start, you have another initial balance. But this is the London specific initial balance, the first hour of the London session. There's an inventories announcement in a couple of hours. Does this affect? There is no inventories today on gas. There's one on crude oil though, but inventories on nat gas are typically on Thursdays. Joshua is asking a very good question. Hi D, is only the current initial balance important? When is the previous session and previous day initial balance become significant? Never. Initial balance is a current day tool. If you're looking at the overall TPO profile and the value area from yesterday, that is a very important data point from the previous day, not the initial balance, right? Sometimes you can have like big single prints that already happened during the initial balance on the previous day. Maybe sometimes you can use the edges of those as, orientation points. But for the most part, initial balance from the previous day is not that relevant. What's more relevant is what happens at the end of the day, whether there was a spike at the end of the day. Now that is important. So if you had like excess that turned around and carried on higher after a big down day, the following day, those single prints typically will come into any kind of playbooks if they are there for today, right? So you can create hypotheses. You can have a look at Dalton's late spike theory for that. And of course, everything is at first just a theory. It's up to you to then find those in real markets and then see how it all plays out. But initial balances from the previous day, I would say that in my 20 years of doing this, I've never went, ooh, what did the initial balance do yesterday? Don't care. But value area, where is the value area from yesterday's business? That is absolutely a big part of what I call the open sentiment. Are we opening above it, inside it? And if we're opening outside of it, how far? If we open inside the value for the regular trading hours, that more often than not will mean some sort of a range. But be careful, because some inside days can also represent a change in sentiment. And they have been days when you see this thing called the value rejection to the opposite side, and then you get the biggest day ever that you've seen. Why? Because typically those changes of sentiment happen at larger time frame supply and demand areas. Like, for example, what would be a good example? Let's see. Just trying to think of something that has ups and downs, like good peaks and troughs these days. Maybe silver. All right, so if we, for example, get back to, there are no really big high quality demand areas, but let's just imagine this one here. Let's imagine this area as a demand, and let's say that the price falls into that today, but then tomorrow COMEX is still in that same area. Ergo, you're going to get an open inside value from the previous day, right? So now you're looking at that and you're going, oh, it's going to be a range day. And then it does a value rejection from the demand area and starts shooting into a massively long swing. So that's something that goes into my weekly plan. It doesn't go into my everyday plan. I'm aware of the levels and where we are in the larger time frames chart location wise, but they are simply just like directional nudges. It's like, yeah, because we're not going to be trading intraday from a massive daily demand or a supply, right? But we can certainly derive some info. Like, for example, now we have a medium quality supply, and this is also the reason why I'm trying to see if we can get a continuation lower, because this was an area where we smashed down before, and on the first attempt, first try, first test, usually you get the same behavior. So there is a potential for a swing in silver. We just need the correct time of day to execute a playbook that matches the intraday hypotheses, not just, it's a daily supply, let's go. We're not swing traders. You cannot hold positions for multiple days on Topstep and most of other firms, actually all firms and futures. But if you have an idea of what should happen, then you should also have a pretty decent hypothesis intraday with the actual intraday level and enough knowledge how that particular market moves. Like, for example, just looking at the naked chart here, almost naked, maybe 88, pull back to 88 and then some shorts. That could be one thing. Maybe pull back to 89 because we do have the edge of value. So test of the value low, reversal, then a smash down. Could we just go down straight from Asia, never actually making any sort of a pullback or anything? Yeah, that could happen. Is that my favorite trade? No, I'm a reversion trader at heart. And even though there are times when I will take gamma squeezes or breakouts from the Asia range, those are not the trades that bank for me. Yes, they happen. Sometimes they're great. But generally, I'm just like, nah, let's try and find something else. So if there's no pullback anywhere to more meaningful levels, I probably won't be able to catch silver. And also because it's still very volatile, and in order for me to trade silver, I would need to use a pretty wide stop. Now, all of these accounts that we have on Topstep and on other prop firms, they are super tight. We're talking $4.5 grand for the biggest one at Topstep. And before you can do risky stuff on the funded level, you need to have a buffer. Now this is a combine, so again, I don't really care all that much. But that still doesn't mean that I should be taking subpar setups, right? So we still have to take the playbooks that are within the plan and try not to be oversized to your eyeballs, because that affects your ability to think clearly. So the bigger the size, and we've seen yesterday with Joe's stats, when he's trading micros, he's super controlled. Everything is like looking much smoother. As soon as he goes to minis, and this goes for everybody, including myself, if I'm trading size that is not appropriate for the account balance that I have in front of me, my emotions kick up as well. And my ability to stay in on trades longer is probably better than the vast majority of traders, because I don't have a problem staying in on trades ever. In fact, I have to get myself out of trades earlier and remind myself to have early exits so that I don't try and go for home runs all the time. But me pulling trades off early for absolutely zero reason, that's not one of my issues. Zara Trader says, thank you for releasing oil into the market. You're very welcome. In case you didn't know, I recently, whatever I touch, it goes absolutely bonkers. Happened with silver last July when I was saying, yeah, the silver, it's looking like there's some supply issues with it, and it looks like it's breaking out of the multi-year range. And suddenly everybody starts trading silver, and I'm like, okay. And then 2 weeks ago, I said, I don't know. I said to Coach Hoop, because we do talk a lot, I said, I don't know. I mean, is oil back? Is oil back? Because I don't know. It looks like it. Should I, touch the stove again? And then it went absolutely nuts. So I don't know what's going on. Whether I'm recently pretty good at finding the biggest pain points and therefore front running some of these black swan events. I don't know. It's never happened before. I can tell you that. Usually what tends to happen is that I trade a product for like an absolute millennia, and then at some point that product starts to dry up. So at one point I was joking that every time I take a new product, I actually kill volatility. So now I seem to have been taking the other way, and anytime I talk about something, it goes absolutely insane. And I said it yesterday, I just want, 6 months with no tariffs, no wars, no velocity logic. Can we just go back to normal, right? Just for half a year. That's all I would like. So that I don't have to use, a million ticks for a stop loss and get annoyed when the markets are jumping around like a yo-yo. Because, we're trying to talk about good trading practices and stuff. And, I have my own accounts that are pretty large, but, that is not really relevant to you, because what possible use can that have? It's like, oh yeah, look at me and my 20 years of funds over here. It's, it's completely pointless to me. So what we do through the educational content is something that should be achievable for most people, not just for like a minor part of the trading community that could do the same with their own capital. So, the whole point is that every trade is pretty much the same up until you get to a certain size. And then you have to take some executions into consideration and, your effect on the market if it's a really thin market. But for the most part, playbooks look the same, setup looks the same. It's really only when you get to, several hundred lots, especially in like equities, you probably 500, 600, 1,000 lots. That's when you have to really rethink your approach, because it's not it's not going to be that great. All right, so it's 11 o'clock a.m. Still no LME open because we are running these streams right now for the next sort of 2.5 weeks, an hour earlier than intended because of the weirdness of the daylight savings. So that's going to be in 40 minutes. We can have a look at how the LME is going to open. That's only relevant for copper, really. All right. YouTube issue, it's been buffering on my end. Bruno, it's not buffering for me. I mean, I've been running the stream over here to see how it looks. It looks okay for me. So, if YouTube is buffering, that I really can't do much about that. Alright, so, Voices 420, excuse my ignorance, what are the gamma and gex lines? So you have this thing called the options chain, right? And you have market makers that use areas with large open interest, aka large volumes, to hedge in order to become to remain delta neutral. And you know, it's a whole can of worms. Just need to let the Cavalier out because he's on diuretics and he has to be out like every 3 seconds. Just one minute. It's my dog. Alright, so where were we? Options, yeah. So gamma levels are taken from the options chain and they represent areas and strikes where the market makers are most likely to engage. It is a lot to take in because options, when you first start dealing with them, you are kind of like, what? And then the more somebody tries to explain it to you, they are coming at it from the expert point of view. So they try to explain it to a beginner, but it's all like so clunky. So they start off well, right? So they start off well. They go, yeah, so you have strikes with open interest, but then you have implied volatility, and then you look at the gamma and the theta and the time decay, and then the beginners are just like, kind of like looking at you, you know, like Goofy from the cartoons and stuff, Disney, just like whoosh, goes over their heads, right? So I try to simplify it. So I basically just say, to begin with, gamma levels, gex levels, there are areas of interest where you have a lot of volume, aka open interest, as it's known. And the market makers use those areas to run their positions. Why? Because they first need to generate liquidity for the rest of us so that we can have tight spreads or no spreads at all. But that also means that they themselves don't have any particular need to be directional. They are not trying to make money direction-wise. They're trying to make money with commissions and giving their clients good prices and all of that. But they themselves typically have one core options position against the majority of the investors that are buying something from them. So if the investor is, for example, long calls on silver, dealers will typically be short calls from a particular strike price. And usually those strike prices are pretty obvious because they are quite large. You know, it's not going to be like a very thin area where there's like 2 contracts sitting. It's going to be something with like 400, 1,000, maybe in some thinner products, you might see like 40 or 50. Like, for example, copper is pretty thin. And, you know, a big call wall would represent like 40 contracts sitting there. But on the other side, something like crude oil, we're talking like 29,000 open interest at 90. So, you know, you have to put it into the perspective of whatever you're trading. And, yeah, so start with that. So strikes with high open interests. You can use bar chart for it. They have a delayed feed, and delayed feed doesn't mean anything. It's absolutely fine because the options are not as dynamic. Like, you're not going to get like the GEX levels changing every minute, right? It's sometimes these GEX levels stay there for 2 weeks. Maybe they lose a little bit of open interest, or maybe they beef up some open interest, but it's still there as a relevant level. Like, for example, in copper, we've had 6 evens, 590, 585, and then lower down 570 as areas of interest that have not changed for like a month, right? So that kind of provides an idea of what the dealers would do. And the dealers are the ones that create intraday flows. Okay, so sometimes people will be like, oh, yesterday's high was created over here. But when you look at the day yesterday, even without knowing that there's going to be a high somewhere, maybe you identify a gamma wall, and lo and behold, the day's high was created just there. It's like, is that an accident? No, it's because the gamma levels act as kind of like invisible support and resistances, and that is where the future support and resistances are created. And it's very important when you have all-time highs and you no longer have anything to look at to the left of the chart, because suddenly you're like, we've never traded here. I don't know how do you approach this? Well, I like to use the options chain for that, and to look at where the calls and puts are, like where are they positioned, and then use those as projected orientation points away from the current price action. And then I also like to use my average ranges, because they are largely not connected to previous price action either. They're just statistical averages that show you a pretty good idea of where the range might be today. Can they get overshot? Can we go into an outlier day? Of course. How often does that happen? Not often, okay? It happens maybe, at best 20%, maybe 30% if you're in some kind of strong trending market. But if you're in a range-bound market on large time frames, overshooting ADRs and going into an outlier day is something that typically happens like 8% of the time on like commodities. And by the same token, if you get to the extreme of the range and then you're trying a breakout, especially towards the later part of the session, that's the reason why I created a video on my own channel called Breakout or Fake Out. And we talk about the averages and how usually shorting into ADR low and longing into ADR high, expecting some mad movement past it without any catalysts or anything, is not the best choice. Not the best choice. So yeah. What is bar chart? A website, barchart.com. Yeah. D, when are we going to see more dog photos? Robert is asking. Half of them are at doggy school. I can show you what they get up to in doggy school if you want. They lead more exciting lives than I do, frankly. Let me see if I can drag out some photos for you. Alright, so now there are other dogs at doggy school obviously as well, but for example, here are my 3 with another 3 other dogs. So this is Rimmer, that's 7, that's Astrid. She's got an overbite, so she always looks like a teddy bear because her tongue is always sticking out. And this dude is always there. He's obviously a bit older. And these are their friends. So that's just like 3 of my dogs. And then, where are the others? This is Mom. That's the mom. This little girl here. I think she's like canoodling with this little dude here, because she has a husband, my King Charles Cavalier. So she's the mom. Yeah, she seems to have found a boyfriend. No, we were just talking, she says. Let me see if I've got a good photo. This is Bernard. He's the biggest of our, like, he's really quite big for what he is. He's still a medium-sized dog, but considering that the previous dog is his mom, he absolutely towers over her. It's very funny to see. Alright, so here's some more photos of them. So this is Crichton, Manny, that's the mom, and that's Bernard. And these are their friends. All crazy. But yeah, they're happy dogs. Very happy. Alright, so natural gas. Let's have a little pulse on the market. Natural gas trying to go below the VWAP. I know we had a question about VWAP from Dave. Let's see. Do I have trouble closing at VWAP? No, if that's my target. But for example, if it's a range day, then VWAP might be too close. So then you have to look at the middle of the whole profile for the range target. And if it goes outside of VWAP and it reclaims it, ideally you want to have some other thing there. Like, for example, initial balance on nat gas. So let's have a look at the setup. Let's imagine I'm not in this and I maybe want to run a continuation trade. Not ideal in this case because we do have a neutral extension. So we have an extension upside, extension downside. That increases the probability of this just pinging back to the middle. But if it doesn't, and if it continues to kind of build more volume, I want to see the single prints below initial balance and obviously below VWAP as well. If I don't get that, there is no entry. So for me, entries of reclaiming of VWAP are pretty late. And anytime I want to run something on the basis of a breakout, I will be in super late. So I'm not aiming to get in when we're breaking the highs or the lows of the range. I'm aiming to only get in once the break and the subsequent move higher, once that actually shows up, right? And then I'm like, okay, yeah. Simcha Berg says, good day, D. Speaking of the live GEX levels, I am aware that TraderAid provides live gamma visualizations, but to me, this is mumbo jumbo that I don't know how to use that yet. TraderAid, I think they're equities only. Most companies out there, unfortunately, will only cater to the equities. That does absolutely nothing for me, which is why I go Mentor Q and or bar chart. So yeah. Tommy C says, hi D, just tuned in. That put a smile on my face. Oh, I'm very glad. Yeah. The Cavalier wants in again, so I will be back in 2 seconds. It's also getting super hot in here, so I'm going to do a little bit of a striptease here. Because the sun comes around the back of the garden and then starts beaming in. And then the lights are like beaming into my face as well. And then halfway through the stream, I'm like, stop panting. Right, so yeah, TraderAid, I think from what I sort of know about them, I think they're equities only. If you only trade equities, then great, go for it. But MentorQ actually has a really nice explanation of what they are, how to use them. So that would be, I think somebody said CME, Troops said CME website also has options data for free. Yeah, that's definitely another choice to go for. I don't know whether they have Greeks as well, because the way I do things, I also need Greeks. But yeah, anything where you can, get stuff for free, that's a pretty decent service, because, if you want to go down the API road, that gets very expensive very quickly. So, and if you want real-time data, that gets even more expensive. And delayed options data is really, trust me, it doesn't change all that much. It's not like you're looking at a tick chart and you're making decisions based on that. You're looking at levels that people trade for weeks on end. So by nature, options chain, unless it's like the 0 DTs or something, it's not going to be that dynamic. Dave says, my dogs go to doggy school for French ring sport. Oh, French ring sport, what's that? Robert says, I buy every bottom in nat gas with ETF UNG. Yeah, I mean, seasonally that can be a good strategy. It's just that this year and, for the last 3 months, it just hasn't really been that seasonal. We had moments where it's like, hey, the nat gas demand is up, let's go. And then it goes, meow, 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 and then suddenly starts just falling crazily. And it still, to me, has that downside bias, unfortunately. So yeah, I don't know. Right now, I'm not really seeing the longs. I'm seeing failure of the longs a lot. And silver's still in range. Nothing going on. Dark Penance says, where am I from? Deeyana, by the way. D, much simpler. I am originally from Belgrade, former Yugoslavia. Because when I was born, it was called Yugoslavia. I don't know what they call themselves now. But I've lived in London since the early 2000s. I'm still in England, but I no longer live in London. I live in the countryside. So since May last year when we bought a new house. All right, did I... Robert also says, I want a dog so bad, but I'm getting ducks from a friend. I don't know, man. You can't be cuddle with... can you cuddle with ducks? It's a bit wild, aren't they? All right, Dog Pan says UK, also Southwest Devon. Right, well, I'm Southeast, sorry. So, Devon is beautiful. Absolutely beautiful. The Chicha says, any good movie suggestions? Any movie suggestions that I give are going to be heavily on the sci-fi side, because I'm a sci-fi freak. But I haven't had a chance to watch a lot of movies. Somehow my brain these days, it's like my RAM memory is like full up, and I have no more room to follow long plots. Way too long. I watch shows. I quite like different shows. But even that is a little bit boring. Granny D over here. Raphael says, great photo from the dogs. Looks like they're all posing. They do pose. Not for us. But apparently they pose for the carers and the daycare. Did I watch Game of Thrones? I really tried, man. I really tried. But I'm more into like traditional sci-fi, like Star Trek, TNG, Voyager. I'm even, I even have a dog called Seven, Jerry Bear. Why? Because Jerry Ryan played 7 of 9. So 7 Jerry, and then Bear because she looks a bit berry. Not Jerry Ryan, the dog. So yeah. I watch devs way ahead of you, Jane. Yeah. If there's like a sci-fi show, I've seen them all. So I've seen Severance, I've seen Murderbot, I've seen oh, you name it, I've seen it. For All Mankind, waiting for that to start soon. What else? There was it called Invasion? I think that was also Apple TV. So yeah. Oh, Dow says, I requested a payout on March the 9th. It has everything approved except for risk. Then I blew account today. Did they remove the funds already? If they have, that should still arrive. Yeah. So yeah. Dogpan says, watched Rogue Trader the other day. Good movie. Yep. I've seen that. And true story about how a trader bankrupted a UK bank also is futures. Yeah. Yeah, I mean, there was the guy that lost. He was working like overnight. I don't know whether it's the same thing. But when I was still working in an actual sort of brick and mortar office prop firm, there was a guy that was left there overnight as like a clerk or something. So he lost, initially I think he lost about 50 million or something. Then he just started losing even more. And by the end of the night, he was down, I think, a few billion or something. And that was hilarious. Yeah. The charts were in sync, but inverted. What is happening? Rafa, this is the function of something called the headline risk. So whenever we have potential for like big geopolitical events that are like all countries are getting involved, right? So we have USA, Germany, Britain, NATO. Everybody's getting involved in the Middle East. Conflict, and unfortunately that tends to affect all the markets. So sometimes they will be in sync, so you will see gold and crude oil having positive correlation. Well, this week they have a negative correlation. Go figure. Yeah, Doc Pencil says, yeah, heard the story, might be that one. And Guy was also drunk. Yeah, it does not surprise me. Yeah. Dow says, as always, got overconfident enough to getting paid. Oh, sorry, man. Try to change that going forward. I know it's so difficult because you're like, yes, I'm the God's gift to trading world. We've all been there, right? But try to replace that behavior from, no, I can do no wrong. Look at it as a risk event. It's like, oh, I just took a payout. Phew, now we have to grind it back up to the previous level, right? So look at it as a highly risky event, as if it's like CPI or PPI or something. You're like, took a payout, now I have to be really careful. Yeah, it's going to come out at 12:30, which is about an hour away. So yeah. Right, our Natty trade here is slowed down a bit. Still fighting this VWAP. Let me have a look at what's going on. Yeah, there's some people who are... They're absorbing some stuff here. All right, let me have a look at where the value is. Okay, so we're kind of rotating through that value and testing VWAP. I'm going to try and stay in on this a little bit longer. But yeah, they've come down to like pretty much zero cumulative delta, and they're just like fighting. But because we are kind of sitting inside the value, I would like to stay in on this a bit longer, but I'm not really not liking this absorption. What else do we have around here? I mean, there is a level at 305, but there's a bigger one lower down, and yeah. So let's wait a little bit longer to see what they do at the 30-minute VWAP, at the 30-minute candle close at VWAP, and then if they are still engaging, and if cumulative delta starts rising, maybe I'll just take it all off. But yeah, let's wait until the end of this final candle and then we'll decide. After that, we should start to see silver livening up a little bit more. And then maybe we have a short in silver with some momentum. So the sync is actual traders just trading both to keep them in sync, or some algo. No, it's just usually it's the larger institutions that are either unwinding positions or doing new positions. There's a thing called the portfolio theory, and it's a pretty extensive piece, and you know it's a very complicated thing with like beta hedging and you know Jensen, like there's this stuff that you probably don't need as an intraday trader, but it is usually not just an algo. An algorithm is more opportunistic a lot of the times, where they are constantly monitoring and listening to stuff, and then they kind of go, oh, something, you know, one word came out, and then they do the action based on that, and they're out of the market before you can even react. So there's absolutely no point fighting that. But whilst a lot of the hedge fund trading is automated, there will be times when you have quants and clerks that have been given the that have been giving some sort of a directive, let's say, to close out a big portion of the positions because of the risk and X, Y, Z and blah, 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 and all of that. All right, so I'm going to try this short silver here, but it's a massive, massive trade for these accounts. So if I get smacked on the face, that's going to be a nice loss of like 800. But the tape is getting a little bit more lively now. And I don't want to have the two positions too going to probably going to close natural gas very soon, because you know, having two simultaneous positions and having to run the stream and blah blah and all that, it's all a bit much for me. Yeah, so Dow says, I think current administration is artificially pumping it to look better in the news. They love stocks. Remember Pam talking about Dow during testimony? Yeah. Yeah, I don't know how legal that would be, because if you're a part of the government, you're usually not allowed. All right, let's get rid of natural gas. You're usually not allowed to do any trading. And if you get caught, I think that there could be some jail time there as well. Certainly like a lot of big fines. All right, let's have a look at whether we can get this break from the Asia low finally running somewhere. What is gold doing? Let's focus on the metals here. And like I said, if I get smacked on the face, it's going to be a big loss. I do not suggest that you do like silver trading on new XFAs, even if it's 150k, just because it's still completely crazy. But we're gonna give it a chance. Right, so gold is showing some bearishness. So copper is showing a bit of the bear move. I need like a bear. Although I have Astrid, so that's kind of the same. Right, are we going to get something here? Come on, silver. Now, the problem is that silver and gold today, they weren't, like on the 30-minute time frame, they're somewhat correlated. But earlier when I was looking at them, they weren't correlated at all. I think that correlation is coming back. So now if gold makes a move, silver should be dragged along with it. Gold is below the Asia low as well. This is an old marker here, so I'm just going to delete that. These are not correct either, so don't look at that. Just going to delete that. But the Asia low I consider as Tokyo close. This is where that is. Right. All right. Let's have a look. Do traders always buy the market like mad crackheads when World War starts? Yeah, usually. It's kind of what our job is. Like, it's moving, I must get in. Ultimate FOMO, right? Right, so we've got about 30 minutes to hang here together. We'll see whether it's a make or break moment for silver, or it could just stay here in the range. So that would be probably the worst outcome, but also very possible. Doesn't mean that we freak out. You just take the loss and go ouch, then get up, dust yourself off, and look for another setup. Would I wait for 100-ounce silver to have a specific average daily volume? Yeah, generally 50,000 is kind of the cutoff point. I think the 1-ounce gold has got there. Last time I looked at it. Let's have a look. So yeah, one ounce gold. I don't know why. A few weeks ago I looked at it and it was trading quite a bit. Now it's only traded 20,000. But AMP added it. Let's have a look at silver. Yeah, it's still not there. Barely 4,000. So until that trades 50,000, nobody is gonna offer it. Yep, silver's still in range. Again, we're using this Asia low. I don't really want to use a bigger stop loss than 164. This one just about encompasses this this range here. 10-day volume moving average has 1 ounce at 83K. Yeah, but that's over 10 days, right? So it's not really what we want. You want to see it trading with enough volume all the time. It'll get there. I'm pretty sure the demand for smaller contracts has been a thing for retail traders, especially since everybody's hiked up the margins to like high heavens, right? It's like silver, they wanted what, 100% of margin? It's like, so what's the point of leverage? It's like, yeah, I might as well just go and buy real silver for this. It's like, why would I want to trade it intraday? It's stupid. Just put it in a vault. And again, they try and move it down, then it kind of pops, and then it dies. So It's either that they haven't really woken up yet. Maybe they need like a line of something stronger rather than a coffee. Come on, traders. Where are you? Trip says, I just don't like that 1 ounce and nano silver has a tick size different rather than just changing currency value per tick. Yeah, that's always the case. So the tick sizes will be different. Like, for example, don't know whether you know, but we do have we have the big crude oil, CL. Then we have the mini crude oil, which is Q something. I always forget. Yeah, so QM, E mini crude, yeah. And then you have the micro crude. This crude, it's got 4 ticks per handle, I think. Hold on, let me see if I'm correct here. So 1, 2, 3, 4. I didn't change this because it used to be like 4 ticks, or is it 4 ticks per point or something? I don't know. I'm confused now. But yeah, this is technically a smaller contract, but honestly, I never traded this, and I think it's supposed to be like $12.50 or something. Like, it's like, what? It's so weird. Why is it so weird? Where it's, big crude, micro crude, $10, $1. This one, I can't even remember. In fact, I'm gonna see what it is. So this is luckily a combine, so I can do that. So let's just see what it is, right? Yeah, so it's $12.50 per tick. Do with that what you like, but you will notice there's less ticks in a handle, effectively. So very, very messed up. So somebody who comes from, for me, the old school trader, right? So I always traded full crude. And then I started messing with the online prop firms. And I'm like, oh, these accounts are much smaller. Oh, let me look at QM. And I'm like, couldn't get my head around it. It's just so alien to me that it's the same product, but it isn't. Like, what? But why? Joe says, is Asia Low the reference with the silver trade? Yes. So if we look, don't know whether it's going to survive the madness, but if you look at how it looks on a 4-hour chart, and I actually have another 4-hour chart that has a different start time. I mean, if this isn't distribution, I don't know what is. So now I'm expecting the 4-hour to kind of keep dropping down. Is this enough of a stop loss even on a 4-hour time frame? Maybe. And some people will be like, bull flag. It's a bull flag. Yeah, it might be, but we're sitting below Asia Low, and this is a commodity, not an equity index. So if I'm wrong, I'm wrong, but I dislike running trades as mean reversions when we've spent the entire morning underneath Asia Low. And sure, this could be wrong. They could just be, creating an accumulation, in which case I eat up the stop loss and go dusting myself off. And then look for the next setup, right? Yeah, QM slippage is, especially at this time. I don't know who trades that, honestly. And I've even asked, my colleagues, I asked Hoop, I was like, do you trade QM, like, ever? He was like, no. It's so weird. So we're all on the same page, we're all like, what is this thing? I don't know. And why does it exist? But hey, some people trade it. They like it. And another attempt at going down. And then them shying away from it. Who's going to push silver off a cliff for me? Just kind of sneak up. Like, you have to be very, very, very sneaky. Just sneak up. And just go, whoop. Because that's what it does, usually. When it decides, it decides. And right now, I'm And the way this looks, I'm not thinking longs, definitely. So definitely want some kind of a shakeout first. I mean, somebody's trying. They're definitely trying, but maybe we need COMEX to push things along. Delta is being pretty resistant. Like every time somebody steps in, they kind of suck it back up. So does a CPI in less than an hour increase the risk of any trades now? Yeah, but we're ending the stream in 20 minutes and then we have another 30 minutes before that release comes in. So if we can get a bit of a flush ahead of that, just like an unwinding move, that'd be great. After the stream, like 9 times out of 10, I just close whatever trade I'm in, and then I wait for my time of day, right? I wait for London close, and I wait for the settlement. Those are the times of day when my setups have the highest probabilities on my products. Yes, I run the stream, but most of the time we are looking at the levels, we're looking at, the GEX areas, where's the ADR high, ADR low, and then we trade based on that. A lot of the times if I see something obvious, I will also give you my hypotheses of what I'm looking at, even though it's a bit early in this time of the day. And they could change with, like for example, if we're sitting underneath value now, but suddenly we shoot up because of the release, and suddenly we're sitting up at value high. Well, maybe I'll do a short, but the danger there is that you get a squeeze past 90, and then my next area of interest is not until ADR high. So yeah, this is not like an enormous trade. It has a potential to become the bigger downside swing because we are seeing the distribution phase. Doesn't mean it will now, right? Just because I'm here and I'm like, well, I want it to work. Yeah, great. The market doesn't care when we run streams. And I'm only here for barely 90 minutes every day. So my setups, like I said, they work best in and around the London close or in and around some kind of settlement, either COMEX or NYMEX. Joshua says it's currently 42 degrees Celsius. Wow, that's hot, man. On the global heat map, it is currently the hottest area. He's killing me. Should I be trading? Is it bothering you? Like, are you finding it difficult to think clearly? If yes, if the answer to that is yes, I would probably find a place with air conditioning or not trade at all, if that's not an option. You have to have your brain working properly. If you're too hot to think, just don't, don't do it. I have a portable, because, in the UK, all right, so we're getting a little bit of movement here now. I have a portable air conditioning thing, because air conditioning is not really something that UK does, because let's face it, we have like super hot days for maybe a month out of the year. So it's just not, not something we're looking at. But if we are, if we were to, for example, do anything with the air conditioning, I don't know whether I'd be allowed to do a split system because they want to keep the, they want to keep the look of the house. So I might have to look into water cooling. And then I don't know whether those are as efficient. But yeah, in the meantime, I do have a portable one. So it looks absolutely ridiculous when I have to have it in here. But, with the lights and everything during the summer, July and August, that's always, it's a necessity, right? Yeah, Bangkok 38 Celsius, Rob Story says. AC is life, yeah. Same thing in Belgrade, man. Like Belgrade gets to like 46 degrees some years. But London, no. London is a different climate, and even though the temperatures are not as high, because of the super high humidity, it's disgusting. It like literally feels absolutely horrible. you get to like 20 degrees Celsius and you're like, right, it's sunbathing weather, let's get into the pool. And yet in Belgrade, 20 degrees is like just warm enough to go around without a coat. Right, so I've just seen a bit of a smash down. So this is a directional sweep. We have just about 15 minutes left to hang here, but because this could ping back at any point, I might just grab these 450 and call it a morning, and then come back and see what else is there. So yeah. So yeah, anytime you see a sweep like that, it could be that they swept it below the initial bounce low and they might ping it back. With silver being so volatile, just don't really want to take a chance. There'll be another opportunity later on, obviously. I think I'm on group coaching today, so you will see me more. I do have to go buy more dog food because I went to buy it yesterday and they were out. There's this like country hunter venison that everybody loves, and they were out. So I drove all the way to West Sussex for no bloody reason. That was 40 minutes of waste. Right, so as you can see now, they're creating a little wick. So I'm fully aware this is still a neutral day. It could keep going down, but at this time of day, this close to the release, I am not going to test my luck. So this was a little scalpy scalp. And yeah, if it falls without me, so be it. But we grabbed a few ticks. And we can now have a break, wait for things to settle after the CPI, is it today? And then we'll see where we're at. Right, I think I'm going to finish it up here because there's nothing else to do. Yeah. Yes. Okay. Let's see what the news brings. Obviously, headline risk is still a risk, so be careful. And I will see you a little bit later. This was the Metal Markets on Topstep TV. I'm Market Stalker D, aka Deeyana Angelo, and I will see you very soon. Enjoy the rest of your day. Take care.